if you're a young person, you need to welcome a bear market. There's a book called The Hitchhiker's Guide to the Galaxy, and they have a rule saying don't panic. And I think that should simply be the agenda of almost every single investor, is you look at this thing and say don't panic.
How do you overcome that fear when you see drawdowns of 20%, 30% in your portfolio?
So there's a thing called the uncle point. When your portfolio falls so far down that you need to call your uncle for help, emotionally and financially, right? And I didn't understand what that meant until I saw a really lousy market in 2008, and I said, okay, this is an uncle point. So when the stock market falls 90%, it first falls 80% and then falls by half.
So have we reached that uncle point yet?
I think at 10% is not even the of the uncle point. People start feeling lousy is the 30-35% rate.
Hey guys, I'm happy to be a part of Zerodha's media network. Together, Zerodha and I plan to bring to you simple yet effective and impactful news and views from the best minds in the financial world. Okay, so Deepak Shenoy needs no introduction. He is an author, he's a fintech entrepreneur, he's someone who's been in the market for what, 20 years, 30 years now?
Kind of, nearly. Well, but I don't want to reveal the actual numbers.
But all of us have been in the market for that long. But thank you so much, Deepak, for making it.
Thank you so much, Sonia, for having me, and congratulations. This is fantastic. I hope, wish you all the best. I hope more growth and more of you that we will see in the coming years.
So it's interesting, right, that you take such steps. I mean, of course, me moving out of my corporate life and into entrepreneurship is a journey that has been facilitated by the freedom that I got because of my investments and financial freedom, as we call it. And that is the basis of the show, the money mindset. What differentiates people who are wealthy from people who are not? And what can I inculcate as a skill to develop that mindset? So you tell me, I mean, your journey has been phenomenal, but what is that one thing that helped you inculcate that money mindset?
So, to be fair, Sonia, I have been probably an anti of this thought process because I didn't start off wealthy. I started off with nothing. I had 30,000 rupees. I started my first company because I wanted to start a company. So in my mind, always, it's been like this thing of saying, I've got to build an asset that eventually works for me. And I always wanted to start a company. In fact, when I was in college, I was struggling to, after I got a job, I went to the US on an assignment, and I got a job in the US. And this is H1B visa processing and all that. And I talked to my dad and he told me just one thing. He said, Deepak, you wanted to start a company. You know that in an H1B, you can't start a company until you get a green card. And that's at least 6 years away. I'm like, oh. Okay, that this changes things, right? So because in the end, of course, I didn't go and I came back. I didn't take up that offer. I came back here for other reasons. But I think that always the thought process was, if I have to build something big, it has to be something I own rather than something I work for. And then I started my first company. It did something, but it did not do enough. Then I worked for someone else for 2 years, and someone else was my boss, who was my boss at that time. He told me this: I'm just scared of you getting another idea and going off starting another business because you're just that kind of a guy. And I think that was my driving force towards everything was build your own business and build it such that you own this asset. Eventually, the business will work for you. And
but that's what investing is also about, right? Owning an asset and build, like, sort of waiting for it to compound over time rather than sort of working for someone else.
In that sort of way, but there's one interesting angle to this, and I keep saying this. The government promotes this in a meaningful way. You pay the lowest taxes if you run a business or own a business than you are when you are an employee. So, for instance, an employee, you pay your taxes and then you spend your money.
Correct.
You start a business and you run the business, then you earn the money, you spend the money, and then you pay the tax.
So basically, you're saying if you want to build wealth for yourself, you need to own an asset, own a business, whether it is in the form of an investment or starting your own business rather than working for someone else.
I think that's just also how, even the government promotes this, in the sense of saying, okay, if you're an employee, we're going to cut your taxes before you start spending. So everything comes to you post-tax, and then you spend your money. If you run a business, Now you can earn some money, you can spend some money, and then whatever is left, you pay a certain tax on it. If you're a personal, you pay up to 40% in as a person, but you can create an LLP, or which you pay 33%. You can create a private limited company, in which case you pay 25%. You create a manufacturing company, you pay 15%. So the government actually says the bigger you are as a business, the more likely we'll reduce the taxes for you. And basically, because now you're employing more people, and perhaps increasing the footprint of employment across where you are. Now, if you invest in somebody else's business, you don't even have to manage the business. Somebody else is managing this business for you, and then you're getting charged a 12.5% income tax on whatever you earn from that person's generating the profits for your business. So it's almost like saying the government promotes you to say, well, keep going up this ladder. But most people remain employees and try to generate wealth as employees because they want the security of being employed. But rather, there is more security eventually in running a business or owning a business.
Or owning a part of a business. That's
And you have lower taxes as well. So it sounds like the government is actually pushing you in that direction. But we keep focusing on employment. We should actually be focusing on how many people are starting businesses.
Okay, I feel relieved to hear that because I'm just out of a corporate job and now into entrepreneurship. But talking about the markets, right? We are at a stage now where the markets have started to correct. I mean, the Nifty is down 10% from record highs, and not too many young investors have seen a bear market. I mean, I have been fortunate, and I say fortunate because it's a bear markets really help you accelerate your financial journey. I've seen about 3-4 bear markets. I'm sure you have as well. But for that young investor who has not seen a bear market yet, what's your advice to him?
So I think this is almost like the difference between driving an automatic car and driving a manual shift car. So my son is 17. He wants to drive a manual shift car, learn using a manual shift car. And I said, why? He said, because otherwise I won't know what it is to drive a manual shift car, because automatics are easy, right? So I think that is what the markets have become. They've become automatics. They're doing their own little thing. And then everybody's like, oh, if it falls 2-3%, don't worry. 2-3 days later, it will go back up. You're getting to learn the manual shift of the investing situation right now, and it's only 10%. So the interesting thing was, I thought it's worse because I saw I feel the depression that people are feeling around me.
Yeah.
I'm thinking, oh God, the market must be really bad. Okay, maybe it's the mid caps. The mid caps are down 11%. Maybe it's the small caps. The small caps are down 10%. As a whole,
It's not that bad.
not
to be
that bad.
honest. Yet.
So yeah. So it could get significantly worse, and we've seen significantly worse. You started your career in the world's greatest bear market.
Yes.
Well, in the 20th century, but the 21st century. But I think I started my career a little bit earlier, and that time 30% falls were a every year phenomenon. So you'd see 30% fall, and then the market would come back, and then people were almost okay, it's fine, it falls 30%. Some stocks will go to zero, and we've not seen meaningfully a change in that direction, in the sense of a lot of stocks going down so badly, 80-90%, other than the really tiny caps. We haven't seen frauds meaningfully in the last 1 or 2 years. So people don't know what it is and it's part of the ecosystem. But because of this, I think this is more like
A learning curve for the...
Ramesh Devani calls it the school of hard knocks. You're going to learn from that school eventually, and it's the experiences that teach you. So in the sense, if you're a young person, you need to welcome a bear market, because it's going to teach you what is how to deal with it. And the way to deal with it is when it comes there's a book called The Hitchhiker's Guide to the Galaxy, and they have a rule saying don't panic. And I think that should simply be the agenda of almost every single investor, is you look at this thing and say, don't panic. The market's down, your stock's down 40%.
But it's easy to say that, right? Fear grips you, and I think there's that whole greed versus fear cycle that you have to go through. But that was my big question. I mean, how do you overcome that fear when you see drawdowns of 20%, 30% in your portfolio?
So there were two things that I remember I read early, and I never recognized what it was. So I read it in a book. So there's a thing called the uncle point. You have to figure out what your uncle point is, which is when your portfolio falls so far down that you need to call your uncle for help, emotionally and financially, right? So this is the uncle point. So
did you make this up, or did you read it somewhere?
No, I read it somewhere,
Okay.
and it was in a book, and I didn't understand what that meant until I saw a really lousy market in 2008, and I said, okay, this is an uncle point. There are lots of uncle points, and people didn't know what their uncle points were. and it went way far below. So when the stock market falls 90%, it first falls 80% and then falls by half. So can you imagine the stock market down 80%? You buy thinking how much more can it fall? It falls 50% more from there, which is what a 90% fall is, right? So it's that there is an uncle point for every person, and sometimes it's
So have we
80%.
reached that uncle point yet?
I think at 10% is not even the of the uncle point. It's like it's the point where people start feeling lousy is the 30-35% range. So if you put in 100, it's become 65. You're thinking this is the worst thing to happen to me. This is where uncle points normally reside. Some people may think it's 20%, some people may think it's 40%, but it's very rarely the 50 or 60% times. It's by 50 or 60%, you've pretty much quit. And you've given up your stocks and you left them for good, and then.
But then what happens is during this time of panic, there's so much now because there's so much of information clutter, right? The other day I saw someone tweet that all the top, blue chip names, whether it's Reliance, HDFC Bank, Kotak Bank, have all now in a 3-year period given you zero returns. Now, when you see stuff like that, then you wonder, oh, should I just take my profits now and get out? Is that the right way to look at it, or do you just sort of ignore all the noise?
So I think more important than ignoring the noise is to get the noise on the other direction. So for instance, you might say that yes, HDFC Bank hasn't given these returns and all that, but there are others. So for instance, there could be a company in the semiconductor space that's given a 6x return over the last, say, 1.5 years. Why is it giving a great return? Because the government is pushing more semiconductors to be built in India, and people in this. So that company actually has good business and is moving up. A company that's in the defense space, many companies in the defense space have gone up 4x, 5x in the last 1 year. Again, why? Because till about 2 years back, the government used to almost exclusively rely on orders being given to foreign companies because they used to be the ones that manufactured it, whether it was from Israel or France or something like that. We would buy the equipment from them, but we would also buy the spare parts from them and so on. Now the government has said all these spare parts business, we're going to do locally as much as possible. So the business of these companies have gone up. So we order ships from our local companies instead of buying them from abroad. We make more. So there is actually a business increase. So the HDFC banks haven't moved because how much more will you bank with a bank at some level? But the shipyards and the semiconductor companies have
lower on the chain.
On the chain, they haven't yet come up. But that's also true for the US. You didn't think Nvidia was the biggest company in the world. In 2013, they were nothing. Nobody knew that AI would come and be such a big. I don't think the guys who owned Nvidia, and I saw a little video yesterday about how Masayoshi Son, the founder of SoftBank, was at one point the largest shareholder in Nvidia.
Correct.
And when Jensen Huang meets him, he often reminds him, do you consider if you had remained the largest shareholder in Nvidia, and
he never thought it would have become so big someday.
Yeah. So he sold it. So it's not that we are also aware of the trends that will change. So what is the HDFC banks of today may not be the biggest stocks of tomorrow, and the biggest stock of tomorrow is maybe someone else. And this has happened in the US. Walmart was the biggest stock in 2000. IBM was the biggest stock in 1980.
So what's your sense, if you had to wear your crystal ball gazing hat over the next 5-10 years, what could be the big themes in the market?
I think, there's a lot of things about India itself that I think is massively scaling. One of the things that I really like about India is it's a consumption-oriented country. We've barely made stuff for ourselves. We buy imported everything, and this is not just as consumer brands, but also as, in manufacturing. So, for instance, if you wanted to buy a lot of the auto parts in the past, the auto parts would come from the US, from Korea, from other places, and we would buy them and then install them in our cars and kind of build our cars. Today, most of our car parts are actually built in India, and that phase is moving. Our best clothes used to go abroad. We used to buy the same clothes back with a brand that's fancy, and then it would be written made in India, but then it would have this fancy brand attached to it, and we'd pay more. We are willing to pay a lot more for premium mangoes, but most of the mangoes were shipped abroad. Now this was bad policy as well, because India promoted exports rather than selling to domestic consumers. But now the government's changed stance and said, okay, let's do production-linked incentives rather than export-linked incentives.
So basically, make in India for India.
Make for India. That's what I keep saying.
Yeah.
I think the make for India concept, and you think of this as it will substitute imports at some level, and because we'll be making for local and when you make for local things, you can do a lot of customization that is very local. And you go to China, you find this. They make so many things that are fascinating, but they just solve people's everyday lives. That's because they have a manufacturing ecosystem and they say, well, you know what, this can be solved by X, and that X happens because your manufacturing setup is very close to you. I think in India, we've just started to kind of build up on that concept. The second big thing is energy. So we're moving from a crude-based universe to electric, nuclear, renewable energy in many ways. So that shift is going to change the way India thinks, because today, even today, I mean, you're in Bombay, but you don't realize it, but in Bangalore, we still have power cuts.
Yeah.
So it's almost like we've grown up with this funda, oh, yes, the power will go, and then it'll come back after like 1 hour or 2 hours, and you have generators and all that stuff. These are unnecessary concepts. We will evolve into a point where nobody will need generators other than people who really need backups, like, things like that. So I think over time, energy independence from, say, having to use crude as an energy resource, that will be another big theme. So none of these companies are in your currently in your top 50, maybe with the exception of maybe Reliance, who has a green hydrogen plant and all that. I mean, the thing that's happening. But beyond that, you're not finding a lot of these companies in the top 50.
There are some of them like NTPC, Tata Power, all of them that are doing a lot in renewable energy as well right now.
Yeah, but then I think here the technology of, let's say, what is building better solar, we don't know. We don't do any research on solar meaningfully. We just import stuff and then put it in. But when we do a lot more research on solar, we'll be able to build different kinds of modules that are specific to how India works. And then, that will evolve. Electric cars, in fact, bikes. We have more research in India on two-wheeler electric bikes than probably in most of the rest of the world other than China. That's because India is a two-wheeler country, and we have to do something customized for us. We have potholes, so you need bigger wheels for potholes. And with the rural situation, most Chinese places have no potholes, so they have bikes with smaller wheels. So you're going to find that some of the
a lot of customization, a lot of local manufacturing. Okay, that's interesting. But coming back to our theme, right, which is the money mindset and just the psychology of money. I've heard you talk about this whole FIRE concept a lot, and you've dissed it as well, saying that you really don't have a certain number that you need to follow, and you don't even need to retire early. I mean, what are you going to do if you retire early with your time, right? But tell us a little more about that, your view on FIRE, and what is the number that I need today to retire early?
So I think, by and large, the problem with the word retire is the problem with the word enough. Because when you know what is enough, then you can figure out how to get there. But most people don't know what that enough is. And it's like, I don't know, like saying, is enough 1 crore or 5 crores or 10 crores? The answer is usually when you reach there, it's almost like I need the next 5 crores or the next 10 crores. But let's say you assume that that number is related to your spending. So if I think I can spend 1 lakh a month. So for every lakh a month today, assuming I'm about 30-35 years old, I need roughly 6 to 8 crores by the time I retire. And this is also because the amount I spend today will go up based on inflation. And it will keep going up even after I retire. So,
but the 6 to 8 crores is not including your house, your children's education, your children's marriage, all of that.
Yes, so you have to think of this as buckets. I have multiple buckets. In some buckets, one bucket is called retirement. So for retirement, at the time I retire, I will need 6 crores. For my children's education, I might need 2 crores. For my travel expenses, which I think is separate from my retirement expenses, it's a kitty, it's a pool. What else are you going to do when you retire is, travel. So you're going to spend, let's say, 1 crore and a half at that time. You're going to need that crore and a half to kind of sustain that. So this bucketized items is basically a difference. Mathematically, it's just a different set of cash flows. Retirement starts paying you out after you retire. The kids' education pays you out when your kids turn 18 or whenever you need them. And the travel expenses can be ongoing. That means you're planning for an every year travel expense from now. Or you say, after I'm 50, I want this kitty to start paying me for my travel expenses. So you can do it in that meaningful way. But let's just say that your minimum number would be 30 times your expenses today. assuming you're less than 50 years old. So the math kind of doesn't work after you're
30 times your annual expenses.
So if you're spending a lakh a month, 12 lakhs a year, that's about 4 crores that you need for your retirement when you turn 60 roughly.
This is taking into consideration inflation.
This is this is actually what you might need right now.
Okay.
So if you need to consider that this is going to increase over the next 10 years or next 20 years, you're going to add an inflation element to it and say, okay, that 6 crores needs to become 10 crores or 15 crores or something like that. So that is a rough calculation. But I'll tell you the biggest problem with FIRE and retirement as a number is, first, people often think either in one direction or the other. And one direction is, I will cut my expenses when I retire. I think people, for instance, they will think, oh, I don't have to go to office every day, so my petrol expenses will come down. But you will not sit at home every day. You're going to go out, you're going to travel, and then.
And why would you want to cut your lifestyle, right? You want to elevate your lifestyle once you retire and perhaps do more things that you couldn't do when you were younger.
In fact, what happens when you think about retirement is, you usually go to a pub, a bar, a lounge to wind down from the stress of the day. If you don't have the stress of the day, you're not going to go to that same pub or the same thing to wind down, and your friends are not going to be the same. You're going to do different things, and those different things can be more expensive things. It may be travel. I mean, I love fish. If you ask me, I would just drive to all sorts of places just to eat fish, in different kinds of fish. But I can't do it now because I have a job and work and all that stuff. But it doesn't mean that when I think of my retirement as an expense, I'm going to cut down, on X or Y. You have to actually think of you're spending the same amount you are right now with some increment, because you're going to actually try to live a better life.
Or maybe develop some hobbies, some passion, all of that. But people are obsessed with this 40 number, right? 40 age. Everyone thinks, okay, by 40, I'm going to retire. I'm done now with working. Is that an irrational obsession, you think?
So, I hate to say, I turned 50 a few days back. And when I thought of myself when I was in my 20s, I said, by 50, I'll be done. I'll be bald and I'll be tired. I have more energy today than I had when I was 40.
You're not bald, for sure, but are you tired?
I'm not tired. I've slept probably 3 hours and I'm still, all alive and kicking and ready to go, and I can spend the next 10 years doing this. I don't think that our perceptions of age are the same as, they don't have a rule in reality. I don't know, I saw this, by the way, I went to a Seinfeld show in Singapore. He's 70. And he's doing a 1-hour stand-up show on the stage. He's 70 and he is fit and he's out there and he's doing. I'm like, if that guy can do this. And I saw another interview of Sylvester Stallone with, I don't know, one of the TV shows and he is fit and he's out there and he's doing. So I'm like, you may have lived a stressful life or whatever it is, but there's no reason for you to think that you will be incapacitated by the time you're 40, 50, 60, 70. There's no reason. And those 70 people inspire me. I'm 50 and I'm nowhere close to the energy they have. So I can have more energy.
So if you had to give a piece of advice to your 25-year-old or 30-year-old self to do things differently, what would your advice be?
My problem was I started my first company too early. So I was just working almost all through my 20s and through my 30s. I think I'd enjoy myself a lot more. I mean, it was not for the lack of money, because I could find the money if I wanted it to. But I just chose not to enjoy myself because I liked my work and I was trying to build a business and all that. But I think that is something, the point about money and the whole reason why money exists is to be spent. If you spend it today, it's called spending. If you spend it tomorrow, it's called investing. So, you're essentially, if you don't have a plan to actually spend that money, you're going to be more captured across. So you're thinking of the goal rather than the journey, and the journey is more important than the destination, because what are you going to do when you get there?
But everyone nowadays only talks about investing, put all your money in SIPs, and that creates a lot of FOMO as well with the younger generation who perhaps is not investing as much. And I don't know how you would want to work around that.
It's interesting because I think we've slowly started to change in terms of, I'll give you an example. You bring any concert in India, suddenly the tickets are sold out. This is the world suddenly starting to realize we need to spend, we need experiences and all that stuff. It's starting. We just don't have supply. we have great bands. By the way, there's a Bangalore Habba that's coming in the next, which is a festival that is coming on December 1st to 15th. And I think it's going to be the biggest thing that Bangalore has seen. Bangalore used to have cultural festivals. Somewhere we lost the plot, and now we're having another festival in December. And then there's a Hornbill festival in Nagaland. And all these things are now, coming to people's attention. And they will all be crowded because India just does not have the capacity today, the supply capacity today, to handle this kind of demand. So, Goa is full and every other place. So you're seeing this change from people saying just invest. And I grew up in a relatively middle class household, and I say that because my mentality and my thought processes don't spend things like that.
Is it still that way for you? I mean, is it hard for you to spend money?
It is. So I have to struggle. I have to fight myself to say I don't care about this anymore, and I have to it isn't that it comes naturally to me. So I have to actually fight it.
Yeah, we were talking about this, right? This whole business class ticket thing. It happens to everybody. Should we, more when you have kids, I think, should we take our kids business class or should we not? Even though we can afford it, I think it's just that middle class mentality that prevents you from making that expense. But then how do you decide what you should buy, where you should splurge or not?
This is actually, I say the differences between the things and experiences. So if you're buying things, my feeling is you can decide whether you like it or not. A lot of people buy things to show off. And that necessarily doesn't help you. Some people it does. But if you're just keeping up with the Joneses wala situation, you're just going and buying stuff because your neighbor has bought it.
Then it's never ending.
It's never ending. You'll never feel any happiness out of it. Because somebody, I know a customer who said, a friend who said, he earned a fairly large chunk of money. He said, I want to buy this car. This is a very expensive car. It is ridiculously expensive, but I want to buy only that. He doesn't want anything else. He doesn't care about owning a house or a fancy this thing or nothing. It's just because he likes that particular car or this thing, and he likes music. So the thing that he's found is that is his passion, and he's going to spend on those things. But there are other people who will spend on experiences. So there's somebody else who told me, I want to go to every single Grand Slam tournament in the world. So I want to go to the Australian Open, the French Open, the Wimbledon, and the US Open. I want to do that all in the same year, get the best tickets possible, and I want to earn enough money from my current money to do that. So it's like the profits of what I invest today is what's going to pay for that in some year. I think that's great. That's what you should spend on because it gives you a passionate layer of experiences.
But personally for you, does money bring you happiness?
I think money is a great motivator. And I always said this. No, when you're young, you don't listen to people who say money is not everything. Money is everything until you have enough. And then after you have enough, you give all this gyan. So till then, yes.
That's true. And money solves all your money problems, for sure.
And when you have money problems, that is your biggest problem. It is everything in the world.
No, I don't think so. I think when you have a health problem, then that is your biggest problem.
Sometimes,
but that is also solved by money.
Sometimes, and you can
buy great healthcare for yourself. Yeah.
And sometimes, of course, sometimes health problems are a result of money problems. You stress too much about money, and then so you can obsess too much about money. But I think at some point it's such a great motivator that you should not deny it. You can incentivize people with money. You say, oh, if you do this, I will give you more money, and they will do that. They will do that in the exact way that you want to do it. And you can do this for your, people that you hire. You can do it because it's happening to you. Your bosses are telling you that if you do this, we'll give you a pay hike or a bonus. And so it's a great motivator. So my relationship with money has been, I unfortunately have thought of it in a different way because I wanted to build assets. I was always paying myself. So I want to get paid less now, but I want that big pot of gold at the end. I remember when I was employed with I've been employed very little. I have a horrible resume. Mostly I work for myself. So for one of those brief periods when I was employed with someone else,
you cracked it. You cracked the formula long back then. Better to always work for yourself.
Well, it's interesting because when I started, they told me, Deepak, I said I've started a company of my own. They said, is that because you didn't get a job at a medical company? And I was like, okay, my God, it's so bad that, now if you're starting something, it's almost like a badge of honor. But when I started, it wasn't. So, but
unemployed.
Unemployed. It was literally that. In fact, a friend who was a consultant, he used to work 6 months a year. And he told me once that he's got a job at IBM. I said, dude, why are you working for a job? You earn more money in 6 months than I do in 4 years or something. He said, no, I'm getting married. So, and his to-be wife's father-in-law, said that, listen, I can't introduce you as a person who doesn't work. So can you get a job? And he got his job for exactly 1 month before his marriage and 15 days after. And then he quit and then he started.
Imagine that.
So, sometimes these things have social implications
Yeah, of
because, this thing. But I think coming back to where you started off with my relationship, or where do I go with the money angle, my thing was this pot of gold. And I said, if there's a pot of gold, I want it. And I think that has always worked out for me. I struggled my first 7 years running a startup and things didn't happen. Then when I thought it was all over and I was getting married and I had no money and all that stuff, so I often tell my wife, I think I married you for the money. So, so
She had money, is it?
well, I was bankrupt. So technically, even if she had 1 rupee, she was more rich.
She married you, that's a big thing.
No, I keep telling her, it's a good thing that.
But that paid off also in the long run.
Yes, of course. I mean, hopefully, but I think the bigger thing of this, the whole angle of this was, it creates this loop of saying, if you build your experience running a startup, people will value you for it. So eventually, when I got a job, it was at a much higher figure, than perhaps my peers were getting at that time. And then eventually now, I think I've come to a point where I don't think money is an obstacle to anything I have to do anymore. But it's been a very different struggle. I don't tell people, don't do this. You should do what, maybe what you did was build yourself financially first and then start up. I think I would have liked to do that, but I am too headstrong and obstinate for myself to think of myself. If I probably went back 20 years, I'd probably do exactly the same mistakes that I have, because I'm almost like, I can do this myself. I'll go and do this.
But for any young investor or young person who's starting off now, right, between that age of 25 and 30, what's the best way to build wealth? I mean, if you had to give A, B, C steps to someone, what would the best way be?
So I think firstly, identify this point. There are certain points in your life you cannot deny. At 25 to 30, you may not have children, but you will more likely have this thought process that says, at some point, I need to retire. When I say retire, I mean, it's like retire because you're working because you want to, not because you have to. So you essentially want to build that pot of thing that says, I can work for a much lower salary because my corpus gives me the rest of
It's growing anyways
on the side. So you want to build that corpus. So you want to take out as much from your income as possible to meet that number. And
so how much would that be on an average?
So interestingly, typically between 10 to 30% of your, depending on your age. So if you start at 25, even 10 to 15% of your salary, of your expenses, not your salary, of your expenses per month, if you just start saving that on a regular basis, and your expenses will go up, therefore the amount you save will go up. In 30 years, you'll have enough of that corpus by the time you get there. But if you start when you're 35 or 40, you got to spend 20 to 25% of your expenses, invest 20 to 25% of your expenses in order to get to the same place.
So when you invest as a 25 to 30-year-old, you start straight with equities, or do you first create that emergency corpus? I mean, what do you do? At what point do you decide to buy a house as well?
Oh, I'll come to house. House is a very tricky topic.
It's a very tricky topic, yeah.
So it's almost like a
controversial
topic. But okay, so I'll start with the emergency. I think this is a waterfall. So you should do your life insurance, health insurance, emergency buffer, which is roughly 10 months to 12 months of expenses that you must have in a bank account. Don't even try to optimize it, saying I'll put it into some bond or something like that. It just needs to be accessible at a day's notice. Once you build your retirement, which can be a combination of equity and debt. And I wrote this in my book. It doesn't matter if you invest in equity or debt. If you do the concept of just investing more. So an SIP for 10 years from a person who's doing 10,000 rupees a month at 15% returns, which is what typical equity returns are, would reach a certain corpus, right? But if you another person did the same thing with 10,000 rupees a month, but increases it by 10% every year, that corpus, even at 8% a year, will give you a higher total end amount. So I could invest it in FDs, or well, maybe not FDs, but something like a debt kind of a fund or something like that.
Even in debt funds you're talking about,
yes.
or just Pure equity fund.
So
Because debt funds don't give you 15% return.
no, I'm saying an equity fund will give you 15, but the second person who's doing a higher amount of investment every year, if they invest in debt funds, though the taxation structure is different, but I'm giving you just overall numbers. The number that you'll reach at the end will actually be higher for the person who's investing more every year.
Every year. So the trick is to step up your
Step up,
SIPs
yeah,
every year.
step up because your expenses are going up, your incomes are going up, and so why should you stick with a 10,000 rupee SIP? When I started, they keep talking about this. They say if you had invested 1 lakh rupees in Wipro in 1980,
Yeah.
I'm like, do you know what 1 lakh rupees was? My father paid 1 lakh rupees for an apartment in 1980, and he didn't even pay it. It was to be paid over a period of time. And people were telling him at that time, are you out of your mind? For 50,000 rupees, you can get a 2,400 square foot plot in Jayanagar. This is how much 1 lakh rupees was in 1980. So you didn't have that 1 lakh rupees. It probably had 1,000 rupees to put in, right? But that 1,000 is equivalent to a lakh today. That's because you could step it up. Correct. And the only way that you can progress your life is that every day, every year, the numbers go up. Think about something. We keep talking of the price of onions or something like that. But we pay more today for coffee at a Starbucks or than we've ever paid when we were much younger. It was 10 rupees a coffee. A high price coffee would be 15 rupees. Now we don't even blink at 400, right? But we crib about the fact that a car which is 2.5 lakhs or 3 lakhs has become 4 lakhs. And I'm saying I bought my first car for 2.5 lakhs in 1997. Today, that same car or equivalent of that car is about 4 lakhs. It's not meaningfully different in 40 years, yet we will notice that difference, but we will not notice the difference so your lifestyle creep, in a way has
gone up far more than your lifestyle creep basically should not go up higher than what your investments are.
I hate to say that as an equivocal statement because people immediately says we should live on Maggi noodles now. So because that's not you need lifestyle creep beyond Maggi noodles. I mean, for sure, that's this thing. But yeah, at some point, your lifestyle creep can be more emotion driven than it is need driven. So emotion driven would be like I want to eat at the most expensive restaurants only because I want to be seen eating at the most expensive restaurants.
That is a problem.
That's the problem because great food can come from anywhere. I'm sorry for quoting Ratatouille, but in that I derive a lot of let's say passion from understanding statements made in cartoon movies. So because I mean, there's so many of them that for instance,
like which is your favorite?
There's a statement in Finding Nemo. I love this. So Dory, who's this person's friend, Nemo's father is looking for him, and he's disappointed because he can't find him. And he goes to Dory and he's depressed, and she asks him, "What's the problem?" And he says, "I promised my wife," and his wife was eaten by a shark. So I promised my wife that I won't let anything happen to him, to Nemo.
To Nemo.
So Dory looks back very pensively, and she makes the statement that I will never forget: "Is if you don't let anything happen to him, then how will anything ever happen to him?" I think that
you have to let yourself fail, right? To learn from it,
and you let yourself out there. If bad things don't happen, how will good things happen? And
wow, that's amazing. That's going to stay with me for a while.
And so there's a stock, and because I'm a stock market guy, there's a stock market solution to this. I mean, whatever example of this in Pakistan in 2008. One day, because the stock market was falling in October, they decided that a bunch of people came and started throwing stones at the stock exchange. So the stock exchange created a rule that said the stock prices cannot go down. And for 40 days, the stock prices were exactly the same because because they could go up, but because they weren't allowed to go down, they didn't go up at all.
Anywhere, they didn't go anywhere.
In December, they realized this is completely stupid, removed the rule. The stock market fell 40% and then went on to have the best return of any stock exchange in the world in 2009. I think that's a lesson. If you don't fall, how do you rise? If you don't know sadness, where is there happiness? And if you don't know
the duality of life, basically, yeah.
Yes.
That is amazing. That's
and
amazing.
I think that Finding Nemo statement just stays with me forever.
It does. Okay, so there's a very touchy topic, right? Buying versus renting. Now, it's very confusing. Do you buy a house? At what age do you buy it? At what stage do you buy it? Your thoughts?
So, it's very tricky because I've done both sides of this equation. and we did a whole podcast on this also because it's such a tricky topic, right? Buy because of the emotional attachment you have to buying a house, because you don't like to be beholden to a landlord who might say he kick you out sometime. These are emotional and perfectly valid reasons to buy a house. Don't start thinking of it from a financial angle, because you'll never be able to justify it in India, because in India the rental yields are of the order of 2 to 3%. Your interest rates are the order of 7 to 8%. The same money that you could put into a fixed deposit will always give you a higher amount of money compared to the rent you will get, rent you would have paid. So it's essentially taking the money and putting it in a fixed deposit will pay you back in your rent and much more. But that's not the reason why you want to own a house. You want to own a house because if I put a picture on the wall, I don't have to ask for permission.
Yeah.
If I
So don't treat your house like an investment. Basically, it is an emotional purchase.
purchase, and most of the time people buy houses because they think they should own a house, and they buy sub standard houses. So they say, I can't afford a big house, so I'll buy a small house. Do you really want the big house? Well, rent until you can afford the big house. Because I did that. I bought my house last year, and
Oh, till then you were on rent?
all the way, all the time. I had no problem with that because I wanted a particular kind of house. I knew it was going to be an emotional investment.
So you bought your first house at the age of 50?
Yes, at the age of 50. So and you know, I don't regret it at all, because I found the exact kind of house I was looking for, the size. I would never have been able to afford this house. I wouldn't have even thought of this house because it was so out of the budgets I would have had earlier in my life. But I think this worked out because this is exactly what I wanted to do.
So why did you decide at the age of 50 to buy a house? Why couldn't you? I mean, because you know, you've developed a pattern of staying on rent, right?
Yes.
So why couldn't you continue?
Again, the problems were the same. At some point, you want a better kitchen, and you can't get a better kitchen in a rented house, right? So you're sitting there saying, okay, I can't do this. And we wanted a particular kind of house with thought process. It needs to face
By
a
then your
forest.
corpus also reaches a certain amount that you can afford.
We can afford it. And I wanted a house that faced the forest, did not have noise. And all of these things, had to come together. And all of these houses are really expensive.
Is
and
there a
stuff.
forest still in Bangalore?
Interestingly enough, we have an army land right in front of us. Of course, they practice shooting guns in there. So every Thursday there's a little bit of a noise. But otherwise, I can hear birds chirping in the morning every day.
That's a luxury anywhere now in
It
the
is.
metro.
It is. In fact, I think I'm just proud of the fact that I can see that even now, and I hope they don't try to build a road through that thing. But I think I'm really happy I waited. It's also a result of experiences. My father bought a house in 1980. He got possession in 1993. He had to pay 2x the amount he originally intended because they had to change the fire escapes and all that. My mother rented a property to a person who refused to pay her rent. It took her 2 years of running through courts to get the house back. And then the stress caused her to have a heart attack. So there was a piece of land that my father had bought. A gunda came and occupied it. And then he had to, struggle to get that land back. Knowing all of this, I'm like,
So buying a house comes with its own share of problems.
so I don't want to buy an under construction house. I said I'll buy only a ready house. I don't mind if it has been lived in earlier, but I want to buy a ready house. I want to buy also a house in which I don't have to pay too much interest on this thing. I don't want to buy a house and rent it out to other people. All these things have come through experiences. And then I have said, okay, the house is a possession like a car. It's not part of my net worth anymore. I don't consider my house part of my net worth, even though it costs a lot of money. Because if I sold this house, I would have to buy another house to live in, because now I'm used to living in a house that I own, and I'm not going to listen to a landlord telling me don't do this and don't do that. So at some point, that emotional battle has to be crossed. I think houses are emotional, and you can have all your financial math that you want, all of it, but it makes no sense. It's like telling a person, don't buy a Birkin bag because you're going to put things in it. But you don't buy a Birkin bag because you want to put things in it. It makes you feel good. And if it makes you feel good, you should buy it. And of course, don't buy it just to show off. But if it makes you feel good, it doesn't matter that it costs 3 lakhs. It just matters that it makes you feel good. And buying a house, if you overpaid for it, it does not matter. As long as you can afford it and it made you feel good, it's like buying a great car. It's like buying a luxury bag, a luxury watch. Yes, they're all functional. They do certain things. but they're not meant to do only those certain things. They're supposed to give you that sense of character, that sense of happiness inside, and you can't put a price on that. There's so many ads that come, right? For everything else, there's MasterCard, or for this, there's all the eventual idea is you can't put a price on the happiness that you get based
By
on
living in
something
your
else.
own house, yeah.
Somebody else told me this. He says, if there's an interview, and I'm sorry, I'm dragging this a little too long, but a guy asks a person, if I gave you $1 million, would you take it? I said, yes. But if I told you that you would not live to see tomorrow, would you take it? He said, no. He said, that means tomorrow is worth $1 million to you. At least $1 million to you. So if tomorrow is worth $1 million to you, and that means your happiness for living one more day is worth a lot more to you than money itself. So why do you care about the money you pay for buying a house?
As they say, right, price is what you pay, but value is what you get. So I guess in a house is lots more value than just the price that you're paying for it. Okay, so I'm going to ask you some questions very quickly, and you have to give me some snappy answers, okay? Crypto or stocks, where would you put your money right now?
Stocks.
One investment you regret making?
Possibly a bunch of stocks that I bought because when they were going down, I won't name them, but many of them continue to go down, and I learned the hard way that you should buy them when they're going up rather than going down.
Don't catch a falling knife.
Don't catch a falling knife.
Okay. The biggest money myth that you've heard?
Okay, good question. I don't know what the correct answer to this is, but I think the biggest myth is either money is everything or don't focus too much on money. The answer is always somewhere in the middle. It's in the gray area, and the myth that people think that they will have enough just because they've thought of a number today is false. It's a process. It's not a destination. You'll be changing your mind all the way, and that's the only thing that you should know is change is the only constant here. So the word money, enough.
Do you have enough money, you think?
I think I do. I mean, right now I would say I'm close to having enough liquid money because most of my money is invested in the business in that sense. But I would say if something happened to me, it would still be enough.
So what is your FIRE number?
I wrote a post about this. 20 crores is what I wrote. So when my business partner came to me at some point, he said, if you earn 20 crores in this business, is that enough? I said, no, I want to make a lot more. 20 crores is where I would feel happy, but I don't think that's the number that is there. The FIRE number is still possibly still there. At 20 of liquid, I would probably be like, I'm done. In terms of needs and necessities.
In terms of needs, wants are much more than that. Everyone says. Okay, what's your top 3 criteria when picking stocks?
So today I follow this principle that stocks should be going up. So this needs a little bit of momentum. This is one of the primary criteria because I like stocks when they're going up. I met a famous investor. He told me about a stock and he said he bought it at 100 and something. He said, I won't buy it until it's 200 and something. He said, why? He said, if it doesn't cross its last high, how do I know it's getting there? So that's one of the reasons why I like it. The second or two other things that I feel is I think the company should have an extremely large growth landscape. So I don't like boring companies that aren't growing. I want them to actually have the path to grow a lot. So it could be defense, it could be so the scope should be very, very large. And the third thing that I like in companies, relatively low key management. That's focused on what they want to do rather than on something on other things which would distract them away from their businesses, whether they own private businesses in the space that are competitors to the core business, or sometimes they have a lifestyle that seems to absorb themselves a lot more than they are in the management.
Avoid the key man risk, as we call it. Right?
In that sense, the businesses should be run by people who are focused on the business, and they should be earning their maximum returns from the business itself. That's what excites me about business.
Okay, so 3 things you said that's important when you buy stocks. One is large runway for growth. The other one is momentum on the upside, and the third one is managements who just put their head down and work. Okay, got that. If you lost everything today, how would you start building your wealth again?
I think I'd still start another company, but probably if I lost, I've done this twice, so I don't want to do that position of losing everything again. But I still think that the thing that would excite me eventually is to build a business and find a way to fund yourself. Today, luckily, you can fund yourself in a lot more ways than I did. You can get external funding, you can get people to support you. But I think I'd still do this, build the business in the way, build another business in an area which I'm really passionate about.
Okay, what's the one financial trend that excites you the most?
The financialization of India, where people are moving away from gold and real estate and building stuff into financial assets, I think that is a massive trend. Whether it is SIPs or insurance or building things, and the fact that they're eventually using that money to spend for building happiness for themselves or joys. I mean, the difference between joys and happiness is joys are fleeting, but they're stuff you remember. Happiness is more a permanence thing. You don't remember that you are happy so much as you remember that I did that thing that made me joyful. So I think people building joys is using their financial assets is something that I think is going to really scale from here.
Okay, and how did you make your first 1 crore?
I think my first 1 crore came only in the last decade. Before that, I was primarily plowing everything I had into businesses, and mostly it came from my investment in Capitalmind itself, through the money that Capitalmind earned and generated, and eventually part of share sales that other people wanted to participate in the business and bought from me.
And if you had to give one piece of advice to that young investor who's going through this correction and bear market right now, what would it be?
Grin, bear it. It's not yet deep enough. But one thing you should do is every downfall is a time to clean your portfolio up and make sure that you're invested in the right kind of either stocks or mutual funds. So whatever you did as a fancy, you don't know why you bought them, you don't really understand why you bought them, it's time to clean that up. Bear markets are time to clean up house. Bull markets are time to turn on the lights and enjoy.
Okay. And finally, the eternal question that we ask everyone: does money buy you happiness?
It tries. I think money can buy you happiness if you're really unhappy about money. But beyond a certain number, it does very little to actually buy you personal happiness. You it is happiness comes by doing the things you do, and sometimes doing the things you do involve getting money in the first place. So you're in the process of earning money, you travel, and then you travel and you find a little bit of happiness in some other place, and then you think to yourself that I will do more. The motivation that money gives you sometimes is the happiness you desire or deserve. So I think it's a reflexive equation. Money finds you happiness, happiness finds you money, money finds, and it works on a downward spiral. It's a virtuous cycle on the upside, and it's a downside. It can be a very bad lack of happiness loses you money, and that loses you happiness more. And so you want to be in the right part of this virtuous cycle rather than the vicious one.
Okay, thank you so much, Deepak. It was really a pleasure speaking to you. We spoke about so many things, and this is the start of my new journey. So thank you so much for supporting me.
I think you will do very well. I hope. I really wish you the best of luck. I think this is going to be a great series going forward, and I'm sure we're going to see a lot more of you going forward. I wish you all the best.
Thank you so much. Thank you for being on the Money Mindset.
Thank you so much, Sonia. Great to be here.